On Friday, August 23rd at 10 o'clock a.m. Eastern Time, Federal Reserve Chairman Jerome Powell gives his annual keynote at the Jackson Hole Symposium. Now, the Jackson Hole speech has historically been an opportunity that recent Fed chairs have taken to unveil a new policy direction or to alter a market view that they don't agree with. Now, going into the meeting, the market is fully convinced that the easing cycle will begin at the September 18th FOMC meeting. However, the futures market has gone back and forth whether the initial move is going to be 50 points or 25 basis points. Now, the CME FedWatch tool currently has a 75% probability for a 25% basis point cut and a 25% probability for a 50 basis point cut. There is little question that inflation is moderated, evidenced by the most recent reading of US CPI, which showed a year-over-year increase of 2.9%. Although that level is still above the Fed's stated 2% target, it is moving in the right direction. This data, coupled with the deteriorating labor picture, has convinced the market that lower rates are coming, but how fast is the question? Now, back on August 2nd, the belief was that 50 basis points was more likely. U.S. two-year Treasury yields reflected this by trading at a 17-month low of 3.79%. As the probabilities shifted in the subsequent weeks, two-year yields traded up to a recent high just over 4%. Now, prior to the next FOMC meeting, we'll see three readings on inflation, beginning with the PCE on August 30th, PPI and CPI on September 11th and 12th. There are many, though, who now believe that since inflation has eased, labor numbers may have become the most important metric. Now, we get the next reading of the employment situation on September 6th. If a trader believes the two-year Treasury yields could head higher from here, they could express that by buying the August two-year Treasury yield futures contract at 3.97 and target a move to the June highs of 4.90. Now, a stop for this trade could be placed below at 3.47. This trade could make $930 if the target is reached and risks $500 if you're stopped out of your level. Now, if a trader believes the two-year yields are going lower from here, they could sell that August two-year Treasury yield futures contract at 3.97 and target a move to the psychological level of 3.00. Now, a stop for this trade could be placed above at 4.57. This trade can make $970 if the target is reached and risks $600 if you're stopped out of your level.